Alright, so I'm going to continue with the Wyckoff study on the wave chart. Basically, his work on the wave chart was really work on tape reading in terms of understanding the factors that drive supply and demand. Supply and demand and its factors are what the wave chart is now going to, is what he's looking at in the wave chart. So let me just go through this example to better explain. In this illustration, it will be seen that volume and activity are both very small proportion on the little buying and selling waves from 10 o'clock to 1 o'clock. So it's just saying that, over here you have, first of all, you have this column, time, and these are the different periods. He just calls them periods, but the point is they're waves. Wave up, wave down, wave up, wave down. So as you can see, it goes plus, minus, plus, minus, plus, minus. So these are just the intraday waves that go up wave followed by a down wave. Up wave are positive, down wave is negative. And he's seeing the duration right here is the time of the wave. How long did the wave last? How long was the wave in terms of minutes? This is a 20-minute wave. The change is the change in price. It went up 2 points. The volume is the volume it attracted, and activity is I think it's the number of trades. But he's using something else. I think he's using tick over time. Basically, the way he measured it was in actual length, in terms of feet. But the way you would do it on a system is by just taking the time the wave lasted, and the activity would be the number of trades. I think that's how it's done. I'm not really sure. He doesn't give a formula for it, but there's other things that can be said about activity. Activity is just, you cannot have a dull wave. Activity, the key thing to remember about activity, instead of doing it mathematically, is that it is the opposite of dullness. Dullness is visible on the wave chart by having obtuse angles, meaning angles that are like flat. Acuteness or activity means that the angle is acute, which means that it's steep, or more steep than, because there's price movement, and the volume is there. So to make a long story short, activity is the opposite of dullness. It means there are a lot of trades coming in, and it should also be mentioned that in all of these variables, whether activity, volume, price, duration, they have interplay, meaning they must be used together. Volume without considering time, it it can give false understanding. On the daily chart, it's okay because every bar is one day. But on an intraday basis, volume has to be, is with respect to time, because you cannot chop it up. You cannot chop up the day into 5-minute bars and stuff like that. So anyway, all of these values, they're together, they form a picture, and these are the factors of supply and demand. Anyway, um, so so from 10 o'clock to 1 o'clock, after the first dip in period 2, the bulls try to put up prices in period 3. So I don't know where is this. Anyway, so the day starts with a small rally. Okay, so which is promptly followed by a dip. Bulls and bears are evidently well matched during this part of the session. Neither show that it's stronger. The bulls and the bears, meaning the rally and the reaction. How do you know? It lasted 20 minutes, pulled back on 20 minutes, went up 2 points, pulled back 2 and an eighth point. The volume, though, is a little bit different. It's 142 versus 65. And activity is slightly more on the bullish side, but the price change is slightly more on the bearish side. Again, nothing special. As you can see from here, it just goes up and full retracement back down. Alright, so the day starts off with a rally, and they're both matched, meaning rally and the reaction, also the bulls and the bears. Both demand and supply are in equilibrium, therefore we don't take a position. After the first dip in period 2, the bulls try to push prices up in period 3, and here is an attempt by these guys to push it up. So another 20-minute wave, and it just goes back up 2.5 points, attracting 73 volume, has activity value of 3. Alright, so they try to push up prices, but they fail to attract the following, as shown by the failure of activity to increase on the up wave and their inability to lift price much. What does that mean? It means activity down equals activity up. So is there any increase in overall activity? No. What about price? Price down equals price up almost. So is there anything special about this? No. It goes up, it goes down, it goes up, relatively the same amount. Activity is relatively the same. So based on these two factors of activity and price change, Wyckoff is explaining that the market fails to attract a following, as shown by the failure of activity to increase on the up wave and their inability to lift price index much above the high. Alright, so he's taking a look at two factors, price change and activity. Demand peters out on this rally to the previous top. A small dip in the fourth period brings out very little stock, however, and the reaction fades out at a higher support. This encourages bulls to try again. Let's see number 4. So 4 is this pullback right here. So now the 5th is the bulls attempt. They're going to try now. So this is very important. Like this 5th attempt is very important. I'll explain why in a minute. Okay, period 5. Once more, they fail to attract the following. Note how the rally dies out in dullness around the two previous tops. Okay. Activity is so small. So now the bears endeavor to break the deadlock. Okay, so this is something that needs to be explained, because most folks, they don't have understanding of volume. So this here is a high amount of volume, wouldn't you say? It's bigger than the last 3 waves. But that volume came over a high amount of time. Okay? That's the problem. Volume relative to time. Volume relative to duration. It doubled the time, and this volume did come out. Okay, so what's the problem? The problem is that activity is not good. That's the problem. If you have a lot of volume by itself, it is not bullish, it is not bearish. The volume is just a factor. It's a factor in isolation. Alright? It must be reviewed in terms of all of the variables. Here, if you just look at it from the perspective of volume and price change, 135 volume produced a point. Before, 73, half the volume, produced 2.5 points. You see? So this wave, if you look at it from the perspective of price and volume, it would be effort, reward. All that volume produced very small amount of price change. If you view it from the perspective of volume and activity, as well as price, it would be dullness. So here you go. Once more, they fail to attract a following. Notice how the rally dies out in dullness around the previous two tops. Alright. So now the bears endeavor to break this. Before I go any further, look at this right here. You see the price and the volume? A lot of volume, very little price change. That's effort reward. And very little activity. All together, they form the picture. What picture? Dullness. And of course, if you have that much volume and very little price change, you have to look at and it's dull, you have to look at the fact that it is almost always going to be during a larger period of time. Here you have double the time. So that all of this, it is evident in the slope of the wave, whether it is acute or obtuse, meaning is it a sharp angle or a blunt angle. This is evident in the wave. The only thing that's not evident in the wave is the actual activity. But if you look at just the angle, you can get a lot of information. So watching the angle of the wave can many times just tell you right away that this is effort reward or this is dullness. The time, either way, it's not a good thing for that side. So when the up wave is dull, it's not good for the bulls. Anyway, this maneuver meets no better resistance. The time elapsed is longer on this wave than the previous swings, but activity fails to increase and the volume is light, which tells us the supply is of poor quality. Only small fry traders are selling. What does that mean? He's looking at the next one and he says activity sucks, and it basically sucks, okay? Activity fails to increase and the volume is light. Less volume, less activity. So we may expect that price to hold around former support levels of period 2 and 4. So how is he determining dullness? He's looking at volume and he's looking at activity. Alright, that's one of the things that he's doing. When he says activity fails to increase and the volume is light, which tells us supply is poor. Why? Small fry traders. So we may expect it to hold around former support levels. This expectation is confirmed that the price index actually halts above the Morling low. Anyway, now we have tentatively bullish signals, since it appears from our observation thus far that the bears are unable to bring out offerings on reactions. Furthermore, the market has come to a complete standstill, which warns us of the readiness for change. That is, at the end of period 6, it is on a hinge. Here it's on a hinge. Why? Because it's at a complete standstill. Okay. So that is a hinge. Everything now depends upon the ability of one side or other to rouse a following. That's what it's all about. You need to attract a following. Alright, either by breaking down the support or by pushing prices up through the forenoon top. How they want to do it? By breaking a level. Because these guys are going to come in on the breakout, that's why. We judge that the stalemate will be broken by an advance because the bears seem to have failed in their week 1 o'clock drive down. The selling on this wave was of very poor quality, only 120,000 in 60 minutes against 135 in 40 minutes. This is another hint to what Wyckoff is doing. He is not only comparing volume with activity, but volume with time. Okay? So, okay? Here, what does he do? He compares volume with what? With activity. So from this you can see what he's doing. He is comparing volume relative to time, volume relative to, I forgot, activity and whatever. So these are different. This is totally different than what you've probably heard about volume and price, which is effort reward. There is effort reward, but there's also volume and time, and there's also a whole different factor called activity, which for now let's just consider it number of trades, as in ticks over time or something like that. Hence, if we are trading for the short swing, this is our cue to buy, though we may prefer to wait for more positive indications. Now the bulls show their strength, this time demand a little stronger, volume is comparatively larger. Volume is comparatively larger, 72,000 shares in 30 minutes, 72,000 in 30 compared to 120. What the hell? Over here, this is really weird because volume is comparatively larger. Alright, not volume is larger. Okay. Now, how does he judge volume is comparatively larger? It's volume relative to time. Okay, so comparative volume. This is something that I don't think is out there, but anyway. 72, this is called, I guess it's comparative volume or something. He's taking the number of shares in relative to time. So 72 relative to 30 versus 120 relative to 60, showing improvement in the quality of the buying. Alright, so again, this time demand is a little stronger. He's judging demand to be stronger using a ratio of volume relative to time, and that tells you about the quality of the buying. Okay. Alright. So, lots of stocks are changing hands. Larger lots of stocks are changing hands. Price rises above the previous high, and activity increases a trifle as they advance, indicating the market is now attracting a following on the upside. We may expect leader to hesitate and perhaps react. Alright, but if activity falls off on the next selling wave, the bulls are likely to become aggressive. Alright, prices sag only fractionally in the next 15 minutes as the market pays its respects to the forenoon resistance levels. Volume is very light and activity dries up almost completely on the dip. What are you talking about? Right here. No activity. This is what we've been looking for. If we fail to buy in the first indication, we must do so now. Light volume, lack of activity. The extreme dullness, low activity, and small volume accompanying the recession tells us there are few offerings coming into the market. So dullness again is using activity and small volume accompanying the recession tells us there are few offerings coming into the market. There is no longer any pressure. Stocks have become scarce at this level. The supply that was holding previous rallies in check has been exhausted, or it has been absorbed on the earlier reactions. Therefore, we step in with confidence and buy. This is pretty good. Over here you see volume dip, lack of volume, confirmed by lack of activity. Confirms what? Scarcity of supply. Right? Low activity, small volume. It is a lack of pressure and scarcity of supply. A sharp rise in period 9 promptly confirms our judgment. So this is the confirmation. So lack of here, over here. Period 8 somewhere here. Okay. I'll just say this, but anyway, a sharp rise 9 promptly confirms our judgment. Yeah, confirmation. volume is expanding in proportion with the activity as prices rise sharply. Okay, showing demand is of good quality and growing urgent. Shortly before 2 o'clock, the bulls rest. Instead, it recedes very stubbornly, as evidenced by prompt shrinkage of volume and activity. So I don't think this is on the chart. And net change is just, the net change is just taking a look at the price change over time. Okay, so in the above and preceding example, the wave chart principle was considered only from standpoint of 1 day's action. You're now ready to take up the next and most vital function of this chart, which is to apply to the market's longer 10 to 20 or more points. Okay, for this purpose you should use the daily graphs. Okay. So next study, which I don't know what I'll do, is going to focus on the larger moves. So again, to recap, what were some of the things that he did? He took a wave chart, he broke it into multiple factors: time, price change, volume, and activity. The first wave up here was 2 points, activity was 3.5. After that, the pullback was 2 points, 3, and they just didn't, they were neutral. So here it is neutral. Okay, someone may say like, okay, but activity is slightly more, volume is slightly more. Yeah, but the price fully came down, so it's still neutral in terms of considering all the factors, as well as that first wave is the morning open. Then after that, over here you had a move that did not increase in activity. This was the rally that went only a little bit higher, and nothing special here, activity still the same. Then the fourth wave down, you had little price change, little volume, little activity. Little volume and little activity, little price change. Okay, nothing special. Here you had a lot of volume, but again, this activity thing is not picking up. So you really need more activity. Okay, so it's just the same thing over and over again until I think over here, where you have dullness and scarcity in period 8. Right there. Period 7, period 6, he started using volume with time. So that's also an important point. So you want to focus on volume with time, comparisons, price over time, and the third one is increase in volume and activity. Okay. Alright, I'm done.